What are stocks? What is an IPO and what is dividend? Did you know Rockefeller had a secret love? Hi, I'm Kevin.
Hi, I'm Justin. It's making a good day. Today we're going to be talking about basics of stock market. See you later.
Thank you, Justin. For learning about finance is good for all, and if we start early, it will always be good. So let's start with our first video on basics of stock market. And let's start by understanding some of the basic concepts. Today, we'll be discussing what are stocks, what is an IPO, and what is dividend. Let's first understand what are stocks. Let me explain in a way everyone can understand. So, let's imagine this is Drake, and he has a very simple business of popcorn. He uses the best ingredients to make yummy tasting popcorn. You know, me and my brother love to eat popcorn too. So, back to business. Drake makes the most amazing tasting popcorn and has one stand to sell them. He gets a lot of customers. His popcorn stand is always crowded with customers wanting to buy more popcorn. Drake is winning it. That's when Drake gets the idea of going big. He is thinking of doing more than just one popcorn stand. So he gets ready to raise money for his big business idea. He goes to the bank for a loan. Now, the banks don't know much about his business, and they think it is too risky to invest in it. So, doesn't give him any loan. But Drake was not gonna lose hope. He called up his childhood buddy, Tony, and asked him to call up some of his rich investor friends. But these rich friends did not understand the potential, and so did not invest in Drake's popcorn business. But still, Drake was not gonna give up on his dream. Like they say, when one door closes, another door opens. He had another option. He decided to go public and give anyone who wants to the chance to invest in his business through something called Initial Public Offering, or in short, IPO. Here, any investor can pay a certain amount, say $1 for each share, to own a small part of Drake's popcorn business. These small parts of ownership in a business are called shares or stocks. After hearing this great investment opportunity, Drake was able to sell a bunch of shares. Now Drake finally has the capital or money to grow his business. Drake used this money to open new popcorn stands, which gives more profits. He also put some of these profits in towards developing new products like the butter popcorn, caramel popcorn, cheddar cheesy popcorn, and nacho popcorn. You know, me and my brother's Justin's favorite is the butter popcorn. So, with more popcorn stands and amazing new flavors, more and more customers started to come to buy more popcorn. Drake's popcorn business was a big success. This helped the business generate good profits. So, Drake decided to give some of that profit money back to his investors. For investors, it is like earning returns on the money they invested in the shares of Drake's popcorn business. This portion of profits that the company pays out to its shareholders is called dividends. When the publicly traded company makes profit, it has multiple choices for using these profits. It can direct the profit funds into research and development. It can save the money, it can pay off its debts or loans, or it can return the profits to shareholders as dividend payments, just like Drake did. Well, he does not have to do this, but it helps in getting the people excited about his company shares, who in return are likely to buy more of his company stocks in the future, resulting in stock prices to go up. If a company has had a good year and has earned good profits, They can choose how much dividend they want to give. The amount of dividend they give can change each time. It's not a fixed amount. It is not mandatory to give it every year. It completely depends on the company whether they want to give away profits as dividend or hold it for other things. You may be thinking, if a company does not earn profits, that can be a reason for not giving dividend. But there are many successful companies who have not given their dividends to their shareholders even when they've been earning good profits. Some of the very famous companies who do not give dividends for years, even after being profitable, are Alphabet, which is also known as Google, and Meta, which is also known as Facebook. And there's also Amazon. Now you must be thinking, if these companies are earning good profits, why are they not giving dividend? Basic logic that the company will be able to generate better value from the profit money by reinvesting it back into the organization, as compared to what the shareholder will be able to get just by receiving dividend cash. Sometimes when the company does not give dividend and instead reinvests the profits in business, it is also a good sign. Generally, the companies give on an average between 2 to 5% dividend on face value. But in case the company is giving more than 8% dividend, which is higher than average, it is always better to do our homework on this company before investing in it or holding its stocks. Sometimes these investments can be bad or risky. So it's always good to double check the facts of the company, which is offering unusually a higher rate of dividend. With this, we are done discussing all concepts for today. I know sometimes it takes time to properly understand each of these concepts, and you may need to watch this video more than once. And it is okay. Even I take my own time to really understand these concepts. So you do you. Now let's quickly revise these concepts, which will help us recollect things. What are stocks? Stocks are when an investor pays a certain amount to own a small part or share of the business. These small parts of ownership in a business are called shares or stocks. What is an IPO? An IPO, or initial public offering, is a process when a private company for the first time sells company stocks to the public. It is through this process a company's ownership changes from private to public, and this process of change of ownership from private to public is also known as companies going public. Next time, if you hear anybody say that a company is going public, now you know what it means. Its shares are available to the public to buy. What is dividend? Dividend is a reward paid to the shareholders for their investment, usually in a company's equity, and it is usually paid out of a company's profits. I hope you are able to understand and regain some of the concepts we discussed today. We will keep revisiting them in our discussions in coming videos. Now it's my favorite part. It's story time! We as kids and humans have always learned better when we are taught through stories, which are so much fun, and they also teach us a lot. So today I'm going to tell you a story about someone who has left his mark on America forever. A boy who had grown up in an ordinary large family in upstate New York, but through his hard work and determination, he was able to become the wealthiest man of all time and the richest person in modern history. You guessed it! He is none other than John D. Rockefeller. J.D. Rockefeller founded the Standard Oil Company in 1870, and he controlled around 90% of all oil in the United States at his peak. Rockefeller revolutionized the petroleum industry. But due to violation of federal antitrust laws, in 1911, Standard Oil was broken into 34 separate companies, which included companies that became ExxonMobil, Chevron Corporation, and others. Some of these corporations still have the highest level of revenue in the world. Now is the interesting part. At the time of the Standard Oil breakup, Rockefeller owned over 25% of the company's stock. This meant he was among the top shareholders to receive proportionate shares in each of the 34 companies created by the breakup. Into 34 companies turned out to be more profitable for Rockefeller. And as the shares of all these companies doubled and tripled in value in their early years, making Rockefeller the country's first billionaire, with a fortune worth nearly 2% of the national economy. With so many shares to his name, did you know Rockefeller had a secret love for dividends? Yes, dividends. J.D. Rockefeller once quoted, "Do you know the only thing that gives me pleasure? It's to see my dividends coming in." Amazing, isn't it? For the next 40 years until his death, he kept collecting dividend checks. So, through this, J.D. Rockefeller not only owned majority of shares in 34 companies, but also made sure he enjoyed the profits through dividend payments he received. He was sure a very good businessman. Rockefeller inspires me to make good decisions, even if the odds are not in your favor. Now, we are almost at the end of this video, and here I would like to ask you a quick quiz question. So here's one. Do you know any company that has paid dividends for more than 100 years? Yes, for more than 100 years. Amazing, isn't it? It is sure a long run. We will be giving the answer for this quiz in the next video. It was so much fun, and if you like what we are talking about, please like, share, and subscribe. And we look forward to
see you
in the next